Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Welcome to another episode of the Tech Behind FinTech. As always, happy to be here. My name is Nnamdi Osuagwu. I'm the host of the Tech Behind FinTech. Every week, Friday, we come to you 12 p.m. Eastern Standard Time to bring you another episode of our show. Today's show is on Buy Now, Pay Later. Exact title, Disrupting Traditional Credit, BNPL's Impact on the Lending Industry. So, today, unlike most shows, is a little bit different. Usually, as you guys know, if you follow us, we do live shows every Friday at 12 p.m. We wanted to experiment today with a pre-recorded show that will go live or air on 12 p.m. So we're testing it out. We reached out to some of our guests, and some of our guests, different time zones can't make the time. So to allow the opportunity to interview more guests in various topics in various regions, we're experimenting today with a pre-recorded show that will go live during our scheduled time. So, as most of you know, I'm not only a host, I'm also cybersecurity technology professional. So the key, we believe in experimentation. So this should not be any different. So so unlike other shows where you post comments, please still post comments. We will look at the questions and answer them in the comments, or get back to you on a later episode the following week, answering questions you may have had that may have been unanswered with the content of the today's topic in the buy now, pay later industry. So without further ado, let's kick things off. First, before we get into the buy now, pay later, I want to start with what we've been doing for the last few, given the amount of layoffs in the industry, just going over weekly the different layoffs that we've been noticing. So hold on, let's do some housekeeping adjustments so I can just make sure I'm in focus. All right, so Zero finance firm in Wellington laid off 800 people, 15% of their workforce. GoPuff out in Philadelphia, it's a food tech, 100 people, 2% of their workforce. Wave Financial out in Toronto, FinTech, 50% employees. Morning Brew, 40 employees. Going down the list. Things we may know. Atlassian products, a lot of us use Confluence, Jira, 500 employees. That's 5% of their workforce last week. SiriusXM, 475, that's 8% of their workforce. Going down the list. Loft, it's out in Brazil, 340 employees. Embark Trucks, I think we talked about that. That's a little bit later. I think we talked about that in a previous week, actually. All right, let's move on. So today's topic, buy now, pay later. So, what is it essentially? So buy now, pay later is a short-term financing solution that allows consumers to use. It's a credit-like service. It essentially is. It's a short-term financial solution that allows consumers to pay for online purchases for goods and services at a later date. The payments can be made in one go or multiple installments. Sometimes it's no interest within specified due dates. So let's talk about that. So, a few episodes ago, I forget the exact number, but we did one on the payment, the credit card and payment industry and how it all works, the payment ecosystem. The online payment ecosystem. I think it was something to that title. So the difference is instead of dealing with banks, the buy now, pay later solution directly connects with the API to the merchant. So they have different merchant relationships. And this, so when you go as a consumer, you'll go and then if you want the buy now, pay later option, you'll click on it and a screen should open up until the company's system, and then you'll, same way fill out the necessary your necessary details to establish an account there, and you can pay for your purchase on the spot. It's pretty seamless, but it's outside of the traditional payment gateways and banking credit structures. So when was buy now, pay later? This is an interesting thing that I didn't even know prior to this show, but they said, I thought it was more so 2017, but it was Bill Me Later, which was founded in 2000 and acquired by PayPal in 2008. That was an early, that was pretty much in early parts of the whole buy now, pay later space. And I think later on, PayPal, as of today, they have PayPal Credit. So I think that's part of that acquisition. Obviously, that's in technology years. It's many moons ago. Another early entrant in BNPL space is Afterpay, which was founded in Australia in 2015 and expanded into the United States and other countries in subsequent years. So that's a 24-year tragedy. If you look at Bill Me Later, now that I think about it, I definitely remember early users of PayPal and seeing the Bill Me Later option. I've never used it personally, but I definitely remember that Bill Me Later. And I just remember that in general, outside of PayPal, but that feature, it's been, dating myself, right? All right, so let's move on. That's what we talked about before, right? This is one of the slides we looked at during our payment ecosystem show. But in this case, the BNPL solution will deal with the merchant have on their application programming interface, right? That will connect to the BNPL solution. So the consumer pretty much seamless. It's just another option you would pay. But if you don't have an account with that particular company, I guess you would fill out the necessary details, to establish an account so you can purchase your item for the merchant in one fell swoop. So let's talk about their impact on the lending industry. First, right? So it's a competitive view if you look at it, right? Because you got consumers can have the options of going with credit cards or going with the BNPL solution. We'll then talk about later on in the show some stats, different age demographics of people that leverage this service and so forth. They provide customers with the option to purchase products or services and pay for them in installments rather than in a lump sum. This type of lending has become increasingly popular in recent years and has disrupted traditional lending industry in several ways. So first, BNPL has made credit more accessible to consumers who might not have qualified for traditional loans. Many BNPL providers use alternative data sources to assess a customer's credit worthiness, such as their transaction history or social media activity, rather than relying solely on credit scores. This approach has made it possible for some people who may have been denied credit in the past. So that's a really interesting take, right? Because you look at most credit cards and loans, obviously, in the United States, it's huge on their credit reports. So you're looking at your Equifax, TransUnion, or Experian, right? But in this case, in certain cases, they look at other forms of ways to assess your credit worthiness. Be interested. Go to the next slide. So second, rather than taking out a loan with fixed interest rates, consumers can choose a payment plan that suits their budget and timeline. This flexibility has made it easier for people to manage their finances and make purchases that may not have otherwise been made affordable. They not been, otherwise not be able to afford. So another way it's disrupted. Many BPL providers offer interest-free repayment plans, which can be more attractive to consumers than credit cards with high interest rates, especially now due to the hiking interest rates. As you know, credit cards are the bills are crazy. So this has forced credit card companies to adjust their offerings to remain competitive. Finally, BNPL raised concerns about consumer debt and financial stability. Critics argue that the ease provided by BNPL providers can encourage people to get more get more credit. Hold on. Wait. It can encourage people to take on some more debt. So, in summary, how it's disrupting the lending industry, right? Change the way people think about borrowing, challenging dominance of credit card companies, and raising concerns about consumer debt. Um, so that's different ways. Let's move on to some stats right here. So this is I see varying numbers actually with this with these stats. So I'm gonna skip it because some the market size right now they're saying started to grow. In 2021, I saw market size at I think it was a 141. Was it billion? I think it was so. Yeah, so right now, certain stats are saying that the market size value is 7.63 billion. I know we had some market hits. 'Cause a lot of those companies, like other companies, we saw a lot of layoffs. We talked about this in previous news segments. But the growth, compound annual growth rate, 26.1% from 2023 to 2030. Um, what else do we see here? Some more stats. Let's move on. I have some more stats I want to kind of get into. So yeah, the things that are the biggest blocks here: consumer electronics. Um, that I actually didn't know prior to doing this show. Retail has a big slice of the pie, obviously, yeah, and leisure and entertainment. It's interesting. So people are using this for probably show tickets or vacations. Interesting stuff. Some other stats. I see the amount of percentage of e-commerce payments. Hold on, let's go back there. And like I said, this varies because they have Sweden on top of the list with some of these stats, how it's being used all over the world. But more interesting stuff that I want to get into are the age demographics. So 18 to 24-year-olds, 62% growth rate, which doesn't surprise me. 25 to 34-year-olds, 28% growth rate. And it starts going down, right? Well, the jump, like if you look at the over 54 in 2020, it was 20%, and it doubled the percentage of people who use it, and it's like 98%. Um, it's interesting, but just more people between the ages of 18 to 24 are leveraging the service at 61. But if you look at under 44, still 60%. Those three years from 18 to 44, over 60% of the market's using 60% of that demographic is using it. So it's really, really interesting stuff. And I guess people over 54 are getting hip to it, and they double in the whole buy now, pay later. In terms of household incomes, you'll see people that make less than 75K. Makes sense. 72% of that percentage, 72.6% are buy now, pay later users. Over 75K, 17.6. Are you talking about the age demographics? And this is just another stat of recent years that 18 to 35, 40 or equate to 41% of BNPL users. 36 to 55, 31, it drops down in terms of the overall out of 100. And these are the percentages of people that are using it. Finding stats is interesting. And I learned something too, but this doesn't surprise me. I mean, the 18, 20, because you look at, like, I know for me back in the days, I mean, I'm still the same. You go on college campuses and like the credit card companies are scouring to get people hooked on your credit card at a young age when you don't have like physical cash. So you're using your credit. So I'm not surprised with some of these stats in terms of usage. Some of the big firms in terms of consumers that use it, PayPal credit. So I think, as we saw before, like I said, the early start in 2000 with the Bill Me Later is probably, rolled up into what they call now PayPal Credit. Afterpay, another one started in 2015 out in Australia. Affirm, Klarna, ZipPay. Market is more in the market. These are some of the big players. So what does future regulation look like? Because right now, they're outside. It's and that's like the thing where incumbents. It's always that issue when you look at like banking or lenders that's been in this space. They have to abide by certain rules where those same regulatory standards are not in place for things like buy now, pay later, and these newer fintechs. So, what might a regulation look like? So this is interesting. We said before they look at other aspects besides your credit report. So TransUnion, Equifax, and Experience are adding a BNPL factor to their credit reporting, but at the moment, it's up to the BNPL provider to decide whether they want to report it to credit bureaus. Um, so so let's unpack that. So right now, obviously with the percentage and people using it that we just went over, um, these three credit bureaus in the United States are making it an option, but it's at the discretion of the BNPL provider to actually report it on the to the credit bureau. So regulation is likely to change that by making it a requirement to report to the credit bureaus. Right now, it's not a requirement. This transparency will benefit not only consumers but also merchants and lenders. It's a tough one, right? And you start really thinking about it. Like, what is the questions that will come up, or the question that I would ask myself? What is the advantage and what is the disadvantage for the BNPL provider to report the report the activity to the credit bureaus if they haven't been doing it traditionally? Um, you know, Advantage of hooking up with the credit bureaus, then some people that may have previously been denied credit might still get denied. Um, but an advantage if you think about it, right? Like with the people they're targeting, and they're not basing, as we saw earlier, some of their approvals on actual credit reporting. So they're not basing it on that. And they want to basically go after their main big hub demographic is that 18 to 24-year-olds might not have credit established. So they're looking at other signs of credit worthiness. And by then knowing, right, okay, if this is not going to be in my credit report, am I more apt to use at that age range a BNPL solution versus a traditional credit card or something like that. So, and then obviously, if I pay it off, I establish an account there, and I make my payments, and it might work out better for the end consumer. They don't want certain things on their credit report. So it's a real, you go back and forth on it. It's just really interesting when you start thinking about it from different aspects. Another potential regulation. Contractual terms will be more transparent and fair. So penalties for late payments and cancellation will be made clearer to the consumer at the moment they apply for financing will be less onerous. So 76% of U.S. consumers are more likely to make a retail purchase if a payment plan is backed by a simple and seamless point of sale experience is offered. So, essentially, how does that integration work? How seamless is the process to leverage the BNPL solution when you're on your favorite, merchant or who has that connection? That's what it looks like. So mandatory friction points in the journey. While retailers want the customer journey to be as smooth and quick as possible, certain countries have made it mandatory to include certain necessary friction points, such as credit checks, anti-fraud, no KYC, know your customer verification checks. This could benefit the consumers, merchants, and lenders by ensuring the shoppers are not overextending themselves. So once again, I mean, it looks like a lot of these solutions are historically rushing in to try to make the process go through out the the traditional, like I said, when you look at establishing a bank account and credit cards and stuff, those are traditional banks. They're held to certain regulatory standards. They're held to KYC. They're held to anti fraud, because you don't want potential money laundering. So all these things are in place for the traditional banks that offer credit card solutions and the credit card houses, where you have a solution like BNPL. They're able to kind of skate underneath the radar. But now that it's becoming more popular on the rise, you're gonna see some regulations coming from it. That is actually, so that's our show today. Today's show is sponsored by Strategic Generation, offering cybersecurity, SOC 2, and pen testing services. Like I said, real interesting experiment today. We're gonna end the show soon, and we will schedule it to. You'll be seeing this 12 p.m. EST. You're going to be seeing this live at that time. It's going to go live at that time. So we're going to be watching to see how this works, and we think it is, with the technology and the vendors that we're using to enable the show. And once that happens, then we'll be able to interview guests that might not be available at that 12 p.m. live EST style, but it'll still be a live conversation that you're used to. You just may not be able to comment in real time. That's not, like I said, that's going to be, it's not for every guest. We love the live show. We love the interaction with our user base. Our users or viewers have been accustomed to that interaction, and we love it. But we're just trying to, experiment and see the different modes and formats that we can push this thing to. So once again, if you have questions, definitely put it on the comments. We'll be reading that. If you have, obviously DM, that always works, and we'll do our best to answer it during next week's show. Next week's show is going to be an interesting one. We're going to be talking about crypto regulation. We're going to have a previous guest, who Chigozie Iwu, former founder, and he exited from his exchange company, Niger Crypto. So he's a friend of the show, always loved his expertise. That's going to be happening next week, Friday, on the 17th, because today's the 10th. Yeah. So we'll be advertising that show shortly. Definitely look out for it. It's going to be an interesting one. He always brings great insight. Wow. So that ends the show. Me literally talking to myself on camera. I always talk to myself on camera, but it's weird when I don't have the interaction. And usually I have Instagram going and it's going live there and everything hitting. But today's fun episode to try this out. You might see more of this. As you know, I'm also a practitioner, and sometimes some work things come up, so we have to schedule it around it. So, like I said, it's a very interesting experiment today. Thank you, as always, for watching the Tech Behind FinTech. Thanks for supporting us. Thanks for all your comments. Thanks for reviewing it, whether you view it live, whether you view it, the next day or a week from now. I really appreciate all the support. It means the world to us. You guys make the show happen. You're the reason why I keep showing up. All right, let me not get emotional. Okay, with that said, have a wonderful, wonderful weekend. I am out. Cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.